although sports tech, if you will, has been around for a while, really some of the things that are driven now are driven by technologies that actually weren't at scale 5 years ago.
You're listening to Sports Tech Feed, the global sports technology podcast.
Hello and welcome to Sports Tech Feed. I'm your host, Thomas Loams. Great to have you join us again this week. On today's show, we have Steve Murray, Managing Partner of Revolution Growth. Revolution is a Washington, D.C.-based investment firm that has invested nearly $1 billion in growth stage companies. In 2016, Revolution Growth invested in DraftKings, and Steve joined the board. In April 2020, despite a temporary shutdown among major sports leagues, DraftKings debuted on the public market through a three-way SPAC merger, with Steve working closely on the deal. Some other notable sports investments from Revolution Growth include Sportradar, the world's leading supplier of sports and betting-related data, and Clear, the biometric identity company that has made entry into airports and sports stadiums around the country faster, safer, and more efficient. Steve is currently on the boards of Revolution Growth companies BigCommerce, Convene, Glowforge, Interactions, Tala, and of course DraftKings. He's also a board observer at Tempus and Uptake. Steve joined Revolution from Softbank, where he worked for nearly 20 years with some of the most important technology companies of our generation, including Yahoo, Etrade, GeoCities, GSI Commerce, Alibaba, Fitbit, Kabbage, and many others. It was great to sit down and pick Steve's brain about the investment landscape across sports and technology, and really leaning heavily on his 25 years in what I would kind of in air quotes call mainstream technology investment, and then obviously looking at the subset of sports tech as a niche within that. So really interesting and broad-ranging chat. As I said at the beginning, I'm your host, Thomas Loams from Sports Tech World Series. If you'd like to reach out with any questions, feel free to connect on LinkedIn. I think I'm the only Thomas Loams out there, so it should be easy to find. And of course, subscribe to our Sports Tech World Series newsletter, sportstechworldseries.com/newsletter. That's the easiest way to stay informed of what's happening in the industry, and really helps to cut out the noise of everything else with all these changes that are happening in the industry and all these updates and M&A activity and all this fun stuff. So definitely highly recommend that as a way to stay in touch.
Steve Murray, Managing Partner, Revolution Growth. Welcome to Sports Tech Feed. Great to have you on the show.
Thank you for having me. It's a pleasure to be here.
So you've had a fairly varied career in technology and obviously from the investment side, and now with some big roles in some very large sports technology and sports data and sports betting companies. Within that term, sports technology, it's a big amorphous term. It covers everything from on-field player tracking units, GPS, to off-field fan engagement, AR, whatever else. Within that big blob, how do you define or conceptualize the sector?
Yeah, sure. And it's an accurate observation. At its highest level, obviously the sports tech category is the combination of really the media businesses, the sports businesses and legacy sports businesses overlaid with technology, and the intersection of the three of those. And in terms of within that sector, how do we think about it and how we look at it? You really have to delve down one level deep. And so sports is not sports. Sports is a whole bunch of different things. It is fans, it is venues, it is players, it's coaches, it's equipment, and it's all those things. And then that overlaid onto, by the way, pro sports is different from college sports, which is different from high school sports, which is different from recreational sports. And sort of it's the combination of all those things overlaid with the really transformative technologies that are pushing real disruption in those markets is really how we look at it.
Yeah. And within that, that blob of sports technology, what's your investment thesis for evaluating companies? So, and kind of second part to that, what's the most valuable areas?
Well, I'll give you the answer to the most valuable areas in 5 years. So currently what we've seen in terms of, obviously that there's been, one of our key theses has been the real change in fan behavior and engagement. So we've seen that over the last several years where fans are interacting with sports different than I interacted with sports as a youngster, as a person growing up in the Boston area where sports was a big part of my life. I loved watching sports, but I see the way my teenage sons and their friends engage with sports. It's very different. They're much more interested in video clips. They actually sit on a Sunday afternoon and watch the red zone. They don't actually watch a full American football game from start to finish. I'm not sure they ever have, maybe never will. They engage in fantasy sports discussions amongst their friends and their colleagues all the time. So there's all kinds of ways in which they engage in sports differently, that using technology, much like the basic disruption of media businesses are now happening with sports. And at Revolution, we get to really have a bit of a front row seat, because one of our partners there, Ted Leonsis, owns a number of professional sports teams, and he's involved in a number of the leagues. So we've been seeing some of these trends for some period of time, and obviously we're able to take advantage of that from an investment perspective around an investment in DraftKings, an investment in Sportradar, an investment in Clear, all of whom take advantage of different changes in venues and fan behavior. So the changing fan behavior is a big one for us, and I think there's lots of opportunity there, and I think we're probably just starting to scratch the surface.
Yeah, definitely. So, I mean, do you foresee in that future, so scratching the surface starting now, and obviously we've seen a huge amount of M&A activity,
That's right.
especially from the sports data providers and anyone seemingly even an arm's length to sports betting within the US. If you have some sort of sports betting, something in your thesis, there's probably a SPAC that's interested in throwing some cash at you. So do you foresee over the next few years the consolidation and integration across those players in the sports space? Because it's in its infancy as an industry. I mean, you can argue as much as you want. Well, sports tech's been around for ages. Like, yes, it has, but if you look at the amount of money pouring in and how, I guess, it's mainstreaming in air quotes, do you see that it's just going to be the consolidation, and we're going to get some fangs of the sports world? We're going to get within sports.
You know, I'd also say that although sports tech, if you will, has been around for a while, really some of the things that are driven now are driven by technologies that actually weren't at scale 5 years ago. Things like, you know, the IoT world is much different than it used to be. 5G is now starting to roll out, which changes things and what you can enable doing. Obviously, there's blockchain things that address things like collectibles and the like. So there's a whole host of technologies. Although sports tech generally has existed, I think the disruptive technologies that now exist at scale are really starting to provide some of these really fascinating, opportunities. The ability really through high-speed data networks and cloud storage of data is really what powers, if you will, things like Sportradar, which powers things like DraftKings. And so those things couldn't have existed at scale 10 years ago in the way they do now. Obviously, overlaid on that, particularly with respect to sports gaming, is a big policy impact, right? So there's regulatory constraints that up until very recently, US states couldn't offer legal sports, and it's only in the last couple that sort of change has happened. It's all those things that are tying together, I think, that's creating the opportunity.
Yeah, and so, I mean, to really force your hand on this, do you think that Sportradar, Genius of that ilk are going to be the equivalent of your Microsoft, Google, Amazon of sports? Obviously, those the fangs of big tech do enter sports, and they do touch on that. But in terms of, say, someone starting a company today, if you're looking for where your exit, your acquisition is going to come from, that endpoint, is there going to be, say, 3 to 4 to 5 key players that are, the biggest fish in the pond?
Yeah, so I think there's a couple of different things. I think right now, for sure, the M&A opportunities are active, and they're not just with the Sportradars and Sport Geniuses of the world, but it's really I'd say even more active with the operators. The DraftKings of the world, and those that are also adding products and services to serve their customer bases, and they're doing it in interesting ways. I mean, the combination of Penn and Barstool Sports was a very interesting match that seems to have worked quite well as a customer acquisition vehicle for Penn, right? So I think we're seeing some of that starting to roll out. As it specifically relates to the sports data business, it'll be interesting to see how that develops. I believe that for the time being, the leagues have an interest in having more than one data provider, because simply competition breeds pricing pressure and the like. And so I don't necessarily see either Sportradar or Sport Genius or anyone else emerging as the sort of only dominant player in that. Obviously, we think the world of Sportradar and Sport Genius has a good business as well, and there will likely be others. But I think the leagues have at least for the time being, have a lot of leverage in trying to spread out the contracts a little bit in terms of exclusive data providers. And you've seen recently with the NFL where they actually did a licensing deal where they picked 3 of the top operators and as opposed to simply one. So I think there'll be more and more. I think for the time being on the data side, there will be more than one company there. There is clearly a lot of M&A going on, but it's not just with the data providers, it's also with the operators. But again, I think we're just starting to see the beginning of it.
Yeah, I mean, you could liken it to the linear broadcast deals that all the leagues will have multiple,
That's right,
partners. It's not, it doesn't profit them well to do it just with one partner. And also it's at the point that one partner couldn't afford it. I mean, the latest $110 billion deal with the NFL there's no one that can write that check on the planet. So
that's right. So the NFL is such an important contract for folks, the operators and the like, that it could be that someone may have individually paid that high price, but in doing so, they likely would have left their business in serious financial peril if the deal didn't work out exactly as designed, which by the way is not in the league's interest as well. Like as you made the analogy to the broadcasters over the years, it's always in the league's interest to have NBC and Fox and ESPN bidding for the Thursday night games, add Amazon into the mix, even better, right? So I think some healthy competition there is very much in the league's interest, and it seems consistent with how they've operated their business in the past.
Yeah, definitely. You've seen that with some European leagues that have had exactly that. They've had one major broadcaster and that deal has turned sour, and then the league is just in the worst possible negotiating position to find replacement broadcast partners. So moving on from the kind of the investment background and the investment forecast and stuff like that, you've got as I mentioned at the beginning, quite a diverse experience with technology businesses, and certainly with that helping them with growth and all that kind of stuff. 20 years at Softbank. So what can emerging sports tech companies learn from more established technology investments and successes?
That's a good question. I think we touched on some of it, but you start by understanding who are the various players in the ecosystem, if you will. We talked about equipment providers. We talked about fans and coaches and players and venues. Those are all different categories of folks that could be influenced or impacted. And then you break out between those. So players is not one group, but pro players act very differently and are trained very, very differently than college players, high school players, club players, and then recreational players. And so considering, I think one of the things that sometimes, particularly in sports tech, that I've seen that is a little bit of is tricky is really product is going after, right? So I've seen different things on an IoT as an example, where it's a force on a shoulder pad for a hockey shoulder pad for a kid. And you start thinking about the cost of that and maintenance of that and really the utility of that. And it sounds really interesting, except as a parent of of 3 kids that played hockey, $2,000 set of equipment to hook up from an IoT perspective, all the various movements that he makes, may or may not be the biggest of markets. So I think understanding the end market that you're trying to go through, what is the technology that you're utilizing now? I think we talked about it earlier. It's important, I think, to say, as you said, sports tech's been around for a while, but what is the technology that the company is using now that didn't exist at the scale that it is now that would allow for the disruption that you're seeing potentially happen? We're seeing a huge change. Obviously, blockchain at some scale has enabled things like NFTs, which has taken advantage of, lots of interest and excitement about digital collectibles. And that market really has exploded over time, but it was enabled by blockchain at some scale. Obviously, collectibles, collecting baseball cards and the like has been something that sports fans have done for long, long years. But it was this new technology that enabled that. So thinking about what the technology is and why that would be different is another thing. And then starting to really understand what is the business model that this business is trying to, what's the 4, 3, 5-year plan in terms of what are they trying to build towards. I think that oftentimes it's exciting to think about new products, and oftentimes the business model doesn't have to be the first thing that one considers, but that as something's beginning to take scale, thinking about, okay, how is this business going to make money? How is it going to unseat the competitor? What's its unfair advantage? Again, back to blockchain, I think there's a lot of excitement around the potential for a blockchain-like solution to really impact ticketing, which is a huge market.
Yeah,
and so then the question is, how do you unseat Ticketmasters and StubHubs of the world that have entrenched relationships and have invested a lot of money in brand and contracts to do that? So that's how I would be thinking about this space.
It's interesting. You probably said the word scale more than any guest we've ever had. And I think that reflects in something that's missed a lot. I mean, it feels so fundamental to understand how your solution scales, but certainly within sports and say pro sports, for instance, a lot of the time companies will just think, oh, well, I'll sell into pro teams. And you go, all right, well, what's your actual addressable market? How are you going to scale that to all the pro teams in, the known universe? Like if we're looking at what you are looking at, if you're looking at the US and then you say, okay, well, Europe, and then you go into smaller markets like Australia, and then bigger markets like Asia that have less, a lot of the time, less budget, but, a lot more potential teams. It's something that even in the sales and marketing kind of approach, there's not that scalability. And if you get saturation in a market, well, you have these relationships, then you need to start introducing multiple products. So
that's right.
If you've got all the pro teams in the US, great. That's actually not that many customers. It's like, how can you sell in, multiple products, multiple services, whatever else it is, to make the most of that?
That's right. And I think to your question earlier around consolidation, I think what we will start to see, and we're starting to see it with the operators, with the data providers, and with others, is that some of these interesting but niche solutions will start to be the targets of a lot of consolidation, right? Where the end market for the scale of a particular opportunity might not by itself be big enough. So what we're seeing as an example with the operators is that there's a lot of competition for new users in the various states that are rolling out gaming, and that those operators quite clearly are trying to find more things that they can offer to their players so that they can keep that customer for a longer period of time and monetize them at a higher rate. So it might not just be that they play, it's one of the reasons why somebody like a FanDuel, DraftKings, and others, they have a daily fantasy sports business. They also now have a gaming business. In some states, they have iGaming, which is more like casino games and the like. And they'll add media properties. So you can imagine that the cost of acquiring those customers in super competitive environments starts to go up, such that some of the niche players may have a challenge existing at scale on their own, but they might be able to create initial very interesting businesses that could be targets for some of these folks. So I think it's just understanding, what business you're in, how big it can become, capitalize your business appropriately, grow at the right scale, and so that you leave yourself with good options when and if the time comes to do something else with your business.
Yeah, definitely. It's been interesting to see the I guess within verticals, areas of focus within sports tech, but then also across different sports. So you could be a very niche player, and I think of Sportradar acquisition of a cricket
right.
Tech company. So it was one of those things that it was the technology within that wasn't particularly groundbreaking in terms of how it was applied to other sports. It was they were in cricket, and that was as a one of the most popular sports on the planet. That was a great way to break into that market and grow that presence, which is, as you said, that niche, but how you play that and how can you add to the lifetime value of your customer and then help grow whatever is the entity that's acquiring you. So to kind of spell it out a little bit more, your point around of being appropriately capitalized, is that more around dilution? And this probably speaks to our entrepreneurs and founders on the listening, say on the call and on the call, listening to the podcast. Is that more don't overextend yourself, don't dilute too much, because then if you go for an acquisition, you're not going to have control and you're not going to actually see some upside?
Yeah, I think it's that. It's also, we've been living in, and you highlighted it, is probably the reason we're having this conversation in part. There's been a lot of activity in the sports tech arena over the last year, enthusiasm about anything sports betting related and the ecosystem that's being built around that. It's still relatively early days in that, so there's a lot of opportunity for companies to be built, which means that it's possible sometimes for companies to raise lots of money early in their life. But it's, one of the things that I've seen over the many years I've been doing this is if you raise too much money at the wrong price too early in your life, then sometimes you're stuck, because if your last round was you raised 50 million at $200 million valuation, well, nobody that did that is going to be particularly happy if your exit is to sell the business for $100 million. If you instead raised 10 million at a $40 million valuation and you can sell the business for $100 million, everybody's happy usually. So it depends, you have to, obviously, entrepreneurs are fearless and they're aggressive, and that's why they can do amazing things and make the world go around. But prudently assessing the market that you're in and the likely size of it is part of appropriately capitalizing the business, so you don't find yourself in a situation where you've raised more money than you can ultimately make the business worth, and that you have this conflict between, whether it's your board members, your investor groups, ultimately between you and your investors. It can become very unproductive if you're not careful.
Yep, definitely. I like what Mark Cuban says about raising capital, is that it's sometimes celebrated as a accomplishment and an achievement and an end goal in itself, but it's not. It's you are taking other people's money on the proviso, on the promise that you will turn it into much more money. That's right. It's an obligation. That's what it is. It's when the hard work begins, so to speak. So it's not necessarily that you've raised all this money. It's like, great, well, that's now you've got a rocket strapped to you, and you've got a timeline that you need to meet to really 10x that, 20x that, 50x that, whatever kind of growth path you're on.
Yeah, I have a good friend right now that previously had run a venture-backed business, and he a couple of years ago started a business, not quite in sports tech, but it's around health and wellness, and so it's sort of somewhat related. And he's very intentionally said, I'm not ever going to raise venture money in this thing until I know that I have a potential $500 million, $1 billion outcome. And he said, because I don't think I need to. And as a result, I leave all these optionality open. If somebody comes to me now and wants to buy the business from me for 20 or $50 million, first of all, I'd make a lot of money. Second of all, I control that decision. I don't feel like I'm letting people down. I don't feel like, and so it's interesting. This is a person that actually built a reasonably successful venture-backed business, but he's chosen, at least for the time being, he said, I haven't ruled it out, but I want to make sure before I do it that I know what I'm playing for.
Yeah. I mean, and that's great to hear that, and very refreshing to hear that, because sometimes you come across businesses and you go, I don't know if you're venture backed, I don't know what you're going to do. Like, give it another 6 months to figure that out before you start taking people's money to do that. And that's certainly one of the downsides of a lot of excitement, a lot of SPAC money, is that sometimes companies that shouldn't raise and maybe should be looked at a little bit more harshly do end up getting a bit of funding.
Yeah, and I see that a little bit like in terms of some of the categories that we talked about. Like, so if you're you think about coaching, that's a big category. But if you think about coaching, actually the number of like Division I football programs that have big budgets is much smaller than people think. So if you're developing a coaching software solution that might be applicable, that uses AI and big data to help a coach better design a practice, by the way, that there's probably a real utility for that. The question is, how many customers might you have? It's probably 50, 100, right? So if they're paying you a couple of $1 million a year, that's great. You can build a big business. If they're paying you $50,000 a year, it still might be a very nice business to build, and you might be able to offer other things alongside that. And maybe your product vision and product roadmap allows for that. But it really is important to understand what market you're in and what market you're playing for as you're thinking about growing the business.
And also, I'd add a layer onto that, the kind of technical maturity of those programs, of those coaches, because there's certainly still a lot of fact that exists in all levels of sports technology. So you're saying, well, this is our addressable market, and you go, well, maybe just cut that in half, because you've got coaches that don't want a bar of it, have absolutely zero interest, and as long as there's breath in their body, they're not going to use a solution like that. So that's something to.
Yeah, you look at like Major League Baseball is, I think, a good example. They've been, I think since the onslaught of Moneyball years ago with Billy Beane and whatnot, sort of analytics has become part of that fabric, if you will. But it's taken a 10-year transition to really embrace the fact that analytics needs to be an important part of player development, of coaching, of where people are out in the field. And that's taken a long time. And you've seen teams like Tampa Bay, as an example, who in Major League Baseball, who's been able to really take advantage of data and analytics in terms of all aspects of their operations of their business, to put a team on the field that won more games than their roster would or certainly their salary cap would otherwise suggest they should. But it's taken a long time, to your point, because there's a lot of folks that grow up saying, I don't believe what's in the data. I believe what I see. And there's, of course, some combo of that's useful.
Yeah. And do you see that, is to kind of return to our starting point, do you see that is one of the factors that's changing as well? Like, just as the legislative changes have kind of swept across the US with sports betting, is it also just one of those cultural changes that is now finally catching up?
I think so. I think those are the ones that are slower to happen. If you're looking to fundamentally change people's behavior, that sometimes takes what time it takes, and it's not always fast, which is why I like the idea of trying to take advantage of behavior that has already changed or has happened. Like, you look at the way, as I was talking about, kids engaging with sports and how they look at sports, and therefore what are the opportunities that you would want to engage with the next generation of fans in a way that's different. They're already doing it that way. They're already playing daily fantasy sports. They're already looking at video clips. They're sharing things amongst their friends. They're interested in players as much as they are teams, frankly, because it's very consistent with how they think about things like data and daily fantasy, which is very, very different than the way we all grew up, frankly, where we're cheering for teams.
Yeah, definitely. And I mean, to think about something like the pandemic as an accelerator for that behavioral change and growth and, I guess, mindset around things. Clear, one of your portfolio companies, we spoke to Christian Lau, CTO of LAFC, and talking about using that as a way for people to safely and easily enter a stadium using biometrics. And it's one of the things that even in 2019, I think people look at that and go, "Ooh, that's a little bit Brave New World, a little bit Big Brother. I'm not so sure about that." But really, there's been, over the last year, if it means that you can get into a stadium quicker, faster, easier, and and safer, also in the sense of security, but also in the sense of health, then let's go for it. So I think that's really rapidly accelerated adoption and acceptance of those kind of technologies.
Yeah, it's a good point. Like, Clear is not on its surface, I think most folks wouldn't call it a sports tech business, but as you correctly pointed out, a big portion of Clear's future growth is in the sport venue business, and it actually has always been on the roadmap. The pandemic has accelerated that and has added in the health component of it. But as an example, it was about a year ago when the NHL was doing their bubble playoffs. It was actually Clear that was powering the teams and the players and the coaches entering into the bubble and identifying who they were without having to pull out ID and the like. So it was, an iris scan or whatnot that it said that this was indeed Alex Ovechkin, that he indeed had passed his COVID test today, and therefore he was free to come into the venue in a safe and secure way. And so I think, something like Clear is actually, going to very likely be a key fabric of sort of sports tech in a way that people don't probably initially think of it.
Yeah, definitely. And it's also, it's one of the less sexy, glamorous parts of it. You can talk about augmented reality, virtual reality, but it goes, all right, what's something happening now? People have to get in and out of the building. They have to do that safely. How do you do that? And how do you make that, more convenient, faster, all these other things? So yeah,
and Clear's doing things like in a couple of venues, I think in San Francisco and the Giants Stadium there, they're actually also tied your identity for those that choose to your payments, so that if you want, there's a line for everybody that's sitting playing cash or credit, and then there's a line for people that maybe ordered through their phone that deliver back and pay through their biometrics, which is, as Karen at Clear says, your identity is your payment, right? You are who your biometrics say you are, and therefore it's safer, it's secure, it's quicker, it's easier, and it's a fan, benefit, if you will. And so all those things become part of the infrastructure of a venue.
Yeah. That's going to be interesting to see how that rolls out. Obviously, with the NFL, going ticketless, that's just one of those steps on the path to it being just accepted as normal. That it's just part of the experience. In the same way the younger generations go, well, I'm just going to watch highlights and follow an athlete. It'll be part of an experience going to a sporting field. And previously talked about what 9/11 as a horrible event did to change the face of how we interact with travel. And it just became normalized that I go through and I get scanned and all this kind of stuff and advanced security procedures. I think COVID will have, probably over a longer time span, it still have a similar impact on how the actual game day experience is changed for sports.
Yeah, I think that the game, venues and the activity with fans in venues, it'll be I think over the next 6 to 12 months will be a very interesting time. Obviously stadiums are starting to open up again, at least in the US, in mass. And folks, I think sports fans are anxious to get back in, so they're coming back. But I think there's been probably some change in behavior in terms of people seeing the broadcasts on TV, getting used to not having to park and go into the venue. I suspect that there'll be a renewed emphasis on making the game day in venue experience even more interesting and engaging for fans, whether that's through the use of some of the 5G technologies or some of the other things. But I think it's going to be an interesting time over the next 6 to 12 months, because I suspect if team and venue owners don't get creative, then folks may start to not attend in the same level they used to attend, because they got pretty comfortable watching on their couches or their phones over the last 12 months. Yeah,
definitely. It'll be interesting to see if there's a dead cat bounce from over the next 6 months to 12 months. And using that term, sorry if I don't know if that's if that's an Australian phrase or not, but basically even a dead cat bounces. It's the idea is that there might
doesn't bounce twice.
Yeah, exactly. That basically people will be this pent up kind of demand for going to live sports, and you'll see an uptick in attendance, but then people scratch that itch and go, hey, I've done that. Now I want to go back to my comfy couch where I have, my second screen experience and I can co-watch and all that kind of stuff.
I think that's right. So I think that over the next 6 or 12 months, you'll start to see I think there'll be acceleration in some of the in-game, in-venue experience for the fan to even add more engagement and more value for that, to encourage that exact trend to continue, keep the fan there, make it so that fan says, I have to be at that game. These are, this is my best way to watch this event and participate.
Yeah. Well, I mean, personally speaking, I'm absolutely desperate to get back in. Saw a UT baseball game a few weeks ago, and that was a full crowd, and that was phenomenal. So for everyone who's kind of umming and ahhing about it, if you're vaccinated or you're in somewhere like Australia where COVID's kind of restricted, get to a game, make it happen. So
I agree. I've been to a couple of games myself, and it's really energizing to see people out there and enjoying themselves and there with their parents or their kids and with their buddies. It's exciting to see. It really is very energizing.
Well, that's a perfect segue to our final question. And this is something I asked all our guests. What is your favorite sporting moment of all time?
Oh, geez. As a Boston sports fan, I must say I have been.
You've got a few. You've got an embarrassment.
I've been a bit of an embarrassment of riches. So let me think. I'd say my favorite of all time which certainly dates me, is I think it was in 1987 when the Celtics, which at the time was my favorite team, was playing their arch rival, the Detroit Pistons, and it was in the playoffs. It might have even been the 5th game of the playoffs. And they threw the ball. They were losing by, I think, 1 point. The Celtics were. They had the ball and they lost the ball on the sideline and it was, I think, half a second left in the game. And they didn't give up. They didn't hang their head. They didn't complain. Maybe there was a foul, maybe there wasn't. That Detroit threw the ball in. Larry Bird came out of nowhere, picked the ball off and passed it to Dennis Johnson, who made an amazing shot, and they won the game. And I think it, for me, defined like everything that I love about sports, which is teamwork. They involved 2 players. They didn't give up. They didn't, complain to the ref. They played it out, and against all odds, they won the game, and the crowd went crazy. And, it was one of those events that I think, even as I describe it, I feel like a little chill in my spine. So for me, it was a great memory. That was one of my favorites. I have several, but that was one of them for sure.
Awesome. Yeah, that's great to hear. And that echoes one of the Medium article I read where you wrote about DraftKings coming up against similar calls from a ref in terms of blocking one of their mergers or acquisitions, and then they the team just went, no, we're going to focus on what we're doing. And I guess you could argue they went on to win the game with their listing and everything that's happened from that. So it's good to see that reflected in business as well.
Yeah, they would say the game is still being played.
Okay, yeah, sorry. Yeah,
but they're certainly still in the game, and they're
same as my point around raising capital, same as listing. It's not the end point. You've got
That's right. That's right. That's right. They would say that they had a good first half, but they got to keep
first half. Yeah, done. All right. Well, we're looking forward to following the second half of DraftKings and the rest of Revolution Growth's investments. And thank you for speaking with us today, Steve.
My pleasure, Thomas. Thank you for inviting me.
And there you have it. That was Steve Murray, Managing Partner of Revolution Growth. Obviously, incredibly switched on in the investment space, and it's interesting to see where he thinks the industry's going and that consolidation that's happening, and also all this M&A activity. Obviously, more recently, Sportradar talking about going a traditional IPA route rather than the SPAC that was floated, but still kind of going ahead at a pace of knots in terms of M&A activity, in terms of listings, and the acquisitions. So an exciting time if you are a sports tech startup that's working in that space and potentially looking at acquisition and exit in data. I think 2021 and maybe the next year is probably the hottest time for that, as there is this land grab that is happening amongst the sports data providers and a lot of money floating around for investment. So it'll be interesting to see how it grows and develops, but certainly two of the portfolio companies with Revolution Growth in Sportradar and DraftKings are incredibly well placed to capitalize on that. So we'll be following that very keenly. As I said, I'm your host, Thomas Loams. Great to have you joining us, and we look forward to seeing you again on Sports Tech Feed.